Brought to you by Tailored Wealth, helping business leaders live their version of a rich life.
Welcome to another edition of the Making Sense of Your Money podcast, where we cut through the financial noise and help business leaders to make smart, confident money decisions. Welcome to episode 33 of the Making Sense of Your Money podcast. I'm your host, Dan Pascone. I'm the founder and CEO of Tailored Wealth. And each episode features a trusted voice in the financial world, bringing their expertise to help high achievers confidently make sense of their money. And today I'm excited. We've got a great guest today. We've got with us Adam Crawford, who's the head of revenue at Candor and has a really unique expertise, him and his firm, in 10b5-1 plan. So for public leaders, public company leaders, if you're working for a public entity, this is one that you'll certainly want to pay attention to. So Adam, thanks so much for joining the Making Sense of Your Money podcast. Pumped to have you today, man.
Yeah, happy to be here, Dan. Thanks.
Cool. So we've got a lot to cover. I know that what you do, what your firm does, and specifically with your background and expertise is going to be really valuable to our audience. So if you don't mind, just start off by giving us like a quick 90-second overview of who you are, what you do, and how you got into this field.
Yeah, would be glad to. I started my career in finance, was a finance undergrad, and worked for a broker, specifically stock plan services broker, right out of school, and went the FINRA path, was a licensed representative, did my CEP, and then I went actually to one of our clients and helped run the stock programs for a company through their IPO and acquisition. So had, I think, a pretty comprehensive experience from the brokerage side over to actually supporting an employee base and going through capital markets transactions in-house, which ultimately led me to a couple of different stops, JP Morgan prior to Candor, and then was really excited to link up with Candor, who I feel like is doing some really innovative things in the stock plan base, particularly around 10b5-1. But what we're doing is helping public companies think differently about their stock compensation, helping them control the market impact of their equity awards. And part of that means providing the best tooling possible for their employees to actually manage that retail float that's being issued in the form of equity comp. We feel like prior to Candor, it was kind of a blind spot, and it seems to be really moving the needle for both the company side as well as the employee shareholders as well.
Very, very cool. All right, so let's start and unpack a little bit about equity compensation in general, right? That's a topic that I think really resonates with a lot of our audience. Many of our listeners have equity compensation or have been exposed to equity compensation in their career, and we do a lot of content on this topic. Talk a little bit about the types of equity compensation that you and your firm specialize in first, and then we're going to talk through a little bit of the workflow.
Yeah, you started to hit on this in the intro. We do work specifically with public companies or very late stage private companies who are getting ready to list their shares on a public market and have that liquidity event. So we won't talk too much about private company equity, but for public companies, there's a couple of different types of equity comp that are common. We work with all of them, but most frequently you're talking about restricted stock units, shares that are purchased through an ESPP or an employee stock purchase program. And in some cases in public companies are still stock options. So someone could be exercising different types of stock options. But all of those award types can be contemplated in a 10b5-1 plan. And as you know, Dan, when you're putting together plans for your clients, those have different tax implications. Mm-hmm. And understanding how those all work and when to sell what and in what order can have a very material impact on somebody's take home when it comes time to realize proceeds from those grants. But RSUs, ESPP, and options are all in scope for one plan.
All right. Love it. Yeah. I mean, listen, the two things that I think resonate here most for me is just how do you effectively diversify away from the company that is providing your employment and your paycheck, right? And you know, for many executives and business leaders, a large form of their compensation comes in some form of company stock. So the diversification is key. And then the second piece is how do you diversify but do it in a tax efficient manner? So that's always a challenge that I think most corporate executives are facing. Let's talk a little bit about 10b5-1 plans. I want you to first explain what is a 10b5-1 plan and who qualifies for it.
Yeah, I think the simplest way to think about a 10b5-1 plan is a preset selling schedule for your company stock. And maybe one level deeper is it's a little more formal than that. It is a contract, it is a binding agreement that you are signing up for in advance to set a schedule of sales or transactions in the company stock. The intent of these contracts is to provide affirmative defense against insider trading. So when you talk about, or you ask, who's eligible, what does that look like? Historically, these plans, these contracts have been reserved for executives at the company, usually Section 16 officers, and the highest ranking individuals at the company who are kind of always in the know, so to speak.
Right.
So it's very difficult for them to sell.
Material non-public information is what we're referring to.
Exactly.
Here, right? Yeah.
That's right. MNPI, material non-public information. And so these plans are designed such that you can enroll in a sales plan when you're not in possession of material non-public information. The contract cools off, then it starts trading, set it and forget it. And it protects the individual from insider trading. I say that used to be exclusive to executives. That has changed. We have institutional clients who offer 10b5-1s to every employee at the company. It is an option that is available as a diversification tool. And that's something that we're trying to do at Candor, is actually help spread the word that more people have access to these than they actually know. And it can become a really powerful tool to, as you mentioned, Dan, help them diversify efficiently, both from a execution perspective, like the price itself of the stock, but also from a tax perspective, there are advantages to selling over the course of a year rather than in condensed periods of time.
Yeah, really, really good stuff. And I agree with you. It is a big misnomer that just those Section 16 officers have access to the 10b5-1 plans. So I love the mission that you and Candor are out to, to educate that more folks, and many folks that don't necessarily know it, can get access to a plan like this. So let's talk a little bit about that. If the company doesn't offer it to all their employees, we'll talk a little bit about an individual that might be a mid-level manager, a higher level manager that does want to set one of these up because they've got, let's just say, consistent RSU grants. Are they able to? And if so, what does that process look like?
Yeah, I always caveat by saying I'm not a lawyer and I don't play one on TV,
Right.
so I will always defer certain elements of that question. But I mean, in essence, if you're getting paid in company stock, you have access to these plans. You just have to do it in a way that complies with your company's insider trading policy. And that's a really, really important document anytime you're talking about transacting in company stock. It is separate from the SEC's insider trading rules. It is a different document that you are tied to as an employee of that company. So always double, triple check that document, consult with counsel internal at your company. You can ask them questions about these things. But in essence, what you can do during open trading windows, if you're able to, so think of it like this: if you're in a time where you can sell stock, so it's an open trading window, you're not in possession of material non-public information, then at that point, the assets are yours. You can do with them what you need to do. And that can include 10b5-1. And so from there, you'd have to just find a wealth manager or somebody like that, or find an attorney, somebody to help you set up the plan. That's what Candor does. Kind of shameless plug, is we help individuals and companies run 10b5-1 plans. But there's other avenues there too. But I think to half step back, start with the insider trading policy. Right. But if you are in a period in which you can transact in the stock, open trading window, not in possession of MNPI, then most likely you can get into some sort of trading plan. But I would, again, always consult with the legal team at your company just to triple check to make sure you're not violating the insider trading policy. But there's no real restriction or limitation on what you do with your assets as long as you're complying with insider trading policy and SEC law.
Yeah, well said. So there's a couple things that I really like about 10b5-1 plans, and we'll get into exactly what Candor does, because I really like the way that Candor sort of automated this. Number one is it allows you to automate, which for any busy professional, automation around your finances is super, super critical and will create better long-term results and frankly, a whole lot less stress and time saved. That's number one. Number two, you mentioned sort of like the open trading windows. Well, as long as you're setting these up at an open trading window, it allows you to automate sales that might be happening outside of those open trading windows. So I've seen personally times where executives get caught at times where they want to actually sell blocks of stock, but they can't because they're not in an open trading window. Well, if you had the 10b5-1 plan set up, you would have it automatically doing that because you're essentially telling the SEC, I am predetermining when I want the sales of this stock to happen. It also, depending on your rank and file and how much stock you have, but it also is a much cleaner experience from a company perspective, from a market perspective, from an analyst perspective, et cetera, et cetera. So that's another piece that I love about it. And then the last piece, which we'll get to in a second, is the tax preferential treatment. So let's talk a little bit about, Adam, when we're talking about, let's think about this as an executive at a public company that has RSUs or restricted stock units, okay? Because they're a little bit more simple to explain, and when we get into taxes, it's a lot more cookie cutter from that perspective. What sort of specifics can a leader use to determine when, how much, how they want to sell their stock if they're setting up a 10b5-1 plan with Candor?
Yeah, that's a good question. And I mean, usually that decision is made in conjunction with somebody's financial planner or wealth advisor, which is actually not something that we do at all. And so we'll get on the phone with our client and their financial planner, maybe their tax consultant, as you work with your clients on these types of things all the time, the liquidity need is determined by a number of factors. Is it an expenditure? Is it just a diversification? Right? All of those things kind of factor into this. But particularly at the executive level, something that is really important is actually the investor relations component of this. So if you are kind of at that senior C-suite or senior executive level, how and when you sell is in the public eye.
Right.
So that you can, what something that we do and something that we would certainly advise is doing some level of benchmarking, some level of analysis. What are other companies, what are other people with your title within your peer group doing? What's happening within the stock in terms of how and when to trade? But part of the benefit of the 10b5-1 is back to those factors that people are contemplating, whether it's diversification, a big expenditure, tuition, a house, whatever it might be. As you hit on, the 10b5-1 plan gives you the flexibility to trade throughout the entire calendar year. And so there's huge advantages there in terms of optionality and flexibility to actually achieve the outcome at the individual level while being mindful of the impact that you might have on the stock if you are that very senior level executive.
Yeah, I think that's so critically important because oftentimes those senior executives are hamstrung to the company dynamics that you reference, but the company dynamics may not fit with your specific needs, your liquidity needs, your financial planning needs, your goals, your objectives, which obviously I and my team know a lot about. So I like the fact that we can sort of check both boxes here. We can make it compliant from a company and SEC perspective, but we can also achieve your personal financial outcomes, which at the end of the day, that's why you're working for the company, right? You're working for the company to achieve your own personal financial outcomes. All right. So let's talk a little bit about taxation, because I know that that's a piece that Candor helps. And, if there's anything I love in life, it's helping people to save on taxes. So talk a little bit about, again, let's use the example of restricted stock units, because I think they're a little bit more clear. Let's talk a little bit about things to think about when you're structuring a 10 when it comes to RSUs and how to manage the tax implications.
Yeah. So I think there's two components that come to mind out of the gate. I mean, with RSU taxes, it's relatively straightforward. Right. It's short-term or long-term capital gains. So that's step one, is understanding the cost basis, basically the value of the shares when you got them, and how long have you held them since they vested, that's going to determine the tax treatment. You're going to pay longer short-term capital gains on the spread between sales price and acquisition price or your cost basis. And so you cannot set up a 10b5-1 plan without understanding that information. Then from there is this concept of tax loss harvesting, which is actually willingly and voluntarily selling certain lots, certain tranches of shares at a loss to offset the gains on other tranches. So especially for folks who have been at their companies for a long time, you're probably sitting on a bunch of different vesting lots, different tranches of stock at different cost basis. With the way the market has performed over the last several years, there's a pretty good chance that some of those are probably underwater and could be harvested for loss. And so that's, you talk about bringing automation to finance. That's a piece that we've completely automated, is the lot selection. So the beauty of working with the right tools is that you as the individual, even your wealth manager, you don't have to do that analysis. You don't have to pick lot by lot, because when you set up a 10b5-1 plan, you have to specify the shares. Right. And so traditionally you would have to go lot by lot and say, I want to sell these specific shares, not just 100 shares, right, these 100 or these 50. With technology, you can automate that such that at the point of a transaction, it picks the optimal lots to get you as close to zero tax as possible. And so that can be happening behind the scenes. Again, just not something that a human should have to sit down and think about 12 months in advance. Remember, you're setting this up at least a year in advance with different cooling off periods. That's a side conversation from a compliance perspective, but right, this is a 12-month commitment. You shouldn't have to sit down and go share by share and allocate which ones you want to sell at what price and what day. Software should do that for you based on the execution price and your tax position.
Yeah. Some really, really good points there. Because as you mentioned, if you've been at a company for a long time, you may be getting shares quarterly or even monthly, right? Mm-hmm. And they're all going to come with different prices to them, right? And so to identify which ones to sell at which period can be super, super manual, right? And I've seen a ton of mistakes made from that perspective because the wrong shares were sold at the wrong time or whatever the case may be. So I love that automation. I think the other misnomer that I see, and Adam, I'm curious to hear your thoughts on this, is with RSUs that I have to hold them for a certain period of time. A lot of times people think it's 1 year. The reality with RSUs is that you're paying ordinary income. These are essentially bonuses, right? So you're paying ordinary income on them the day that those shares are vested, right? So now how long you want to hold them is going to determine short-term or long-term capital gains. But essentially, if you get a company that's worth $50 and the stock is $50, the minute that $50 gets exercised, you've paid ordinary income on it. Now, the time frame that you hold from there will determine what the gains after that $50 are taxed at. But can you speak a little bit to maybe plans that you've seen structured where folks are literally just selling the stock the minute that they vest?
Yeah, it's a good point. I mean, before the capital gains component kicks in, RSUs are taxed just like a paycheck. It happens through payroll. The company is withholding or selling certain shares on your behalf, but effectively the company is paying income taxes on your behalf the same way they do with every paycheck. And then you are receiving the net shares or shares that you've already paid taxes on. And again, assuming that vest happens during an open trading window, you could sell them as soon as they vest and you would pay ordinary income tax rates on those shares, but you're still making money. By no means do you have to hold those shares if you want long-term capital gains a year and a day from the acquisition date, and you're in the clear for a lower tax rate there. We do see that, and I think across the equity compensation landscape, I think a lot of the, like even the stock plan brokers would say there's almost two buckets. There's like the ATM people when it comes to stock comp, people who log in every quarter, they sell it all, and it's just cash. It's a bonus. Nothing wrong with that. Again, it's your money, it's your assets. And then there's people who hold, air quote, forever. They don't touch it, whether they don't know how, or they're scared, or maybe they believe in the company. That's, open for debate, but you kind of see those two camps, and there's a few people in the middle, but a lot of people will just sell when it vests. Now, again, do you need to be logging in and doing that manually every single time? No, right? You should be able to automate that. And then again, the open trading window piece is really important here. We do have clients whose companies have monthly vesting. You mentioned, Dan, yourself, you have some clients with monthly vesting. Inherently, some of those are vesting during a closed window where you can't sell them. You might even owe taxes on it and can't sell the shares to generate liquidity, compared to like if you were in a 10b5-1 plan, if you made the decision that that's the right option for you. We talked about that gives you the ability to sell throughout the calendar year. So we do see that incorporated in plans, especially with people who have monthly vestings. So some of those vestings are in a closed window and they can't sell outside of a plan. And then there is also this other idea of the kind of call it the restricted population list or the special blackout list.
Right.
If you're in a certain function at the company, it doesn't really matter your seniority, but if you work in anywhere near NA, if you work in certain parts of finance, if you work in research, like there's a lot of roles and functions that expose you to material non-public information, regardless of your income level, regardless of your job grade. And now you can't trade during the open windows because you have MNPI. And that's actually where we've seen a lot of institutional demand for NB51 plans, because they want their employees to have the choice. They're not saying you have to do anything, but if you are one of those individuals who's in possession of material non-public information, even in an open window, you can't sell.
Right.
Like you have to have some sort of protection in place, which has become a very common application of 10b5-1 trading plans for people who work in one of those functions, who are kind of constantly in the know before Wall Street.
Yeah, I mean, it is absolutely, for the right situations, a win-win for the company and for the individual employee, right? Because the company gets to de-risk, and frankly, they're giving you this stock. They want it to be a benefit for you, right? I mean, the company the reason that they give stock is to retain talent, to attract talent, to have, good employees that are going to produce results for the organization, right? But when you're dealing with a public entity, the marketplace determines a lot of these rules and restrictions. So being able to do it in a predetermined compliant manner is great for the organization. And then having some optionality around it, I think, is great for the individual, as long as it's built into your overall financial plan. All right. So really quick before we shift gears, Adam, let's just touch really quickly on ESPP, so employee stock purchase plans, and how that might differ when it comes to 10b5-1s from the traditional restricted stock units.
Yeah. So ESPP, employee stock purchase plans, give employees an opportunity to purchase company stock, typically at a discount.
Right.
And do so through payroll deductions. Without getting into the weeds on how ESPP shares are taxed, because it is a little bit more complex. It's more similar to an incentive stock option. So there's some more moving parts there. But in the context of 10b5-1, I think we can really simplify things. ESPP shares, after the purchase, they're your shares. Those are long company shares in your account. They're your property, your asset. They can be contemplated in a 10b5-1. The tax treatment is what matters, that the person running the 10b5-1 knows how those things are treated. Again, back to the idea of tax loss harvesting, ESPP just becomes a different type of lot or different type of tranche of share. And it's very important that the team around you or the provider of a trading plan understands that impact, but certainly can be utilized the same way as a vested RSU in the context of tax loss harvesting. Whether you sell those shares before the long-term gains holding period or not doesn't matter as much. It's in the context of this program. They can be treated very similarly without getting into the weeds on the differences in the taxation. Again, automation. I feel really strongly that employees at companies who are paid in stock should not have to go become experts in financial markets and instruments in order to achieve their outcomes. I mean, that's what I kind of experienced firsthand, when I was at MuleSoft, was PhDs, some of the most brilliant people I've worked with, were struggling with the fundamentals, and I kind of took that knowledge for granted, being, early in my career, having gone through the FINRA exams and all these things. And that's when it sort of dawned on me that you shouldn't put the onus on the individual employee. Back to your point, Dan, this is supposed to be a motivational and retentive tool. It's not supposed to be adding stress or adding complexity to the employee's life, to the individual's life. And if it is, there's tools out there, right? I think that's what we want to communicate, is that there's really, really advanced automated tools out there to help everybody realize the maximum potential of this benefit, and actually turn a company benefit into a livelihood, right? Help them deliver and achieve outcomes.
I think that is so well said, man. That's a great place to kind of shift gears. And I'll just add to that. I've seen firsthand through numerous and a large number of clients at this point in time, how equity compensation can be life-changing from a wealth perspective and can be life-changing for your life. Forget about the money component. It can really change your life. But it is complex. It's not like getting a paycheck or getting a bonus. There are more complexities. There's more optionality around it. So that's why I love what you and your team are doing at Candor to help simplify that and to help, take the onus off of the individual and the company and create levels of automation to it. So, all right, good stuff, Adam. That was great. So now we're going to shift gears a little bit. We're going to get to know you. So you are officially entering the lightning round. So I never tell our guests about the lightning round. Deal with this is just give us the first thought that comes to your mind. Could be a one-word answer. Could be a long, drawn-out thought. Whatever comes to your mind. Ready?
All right, let's go.
All right, sounds good. We'll start with an easy one. Coffee or tea?
Coffee.
All right. One meal for the rest of your life. What is it?
Steak and potatoes.
Okay,
Ribeye.
sounds good.
Yeah.
Can't go wrong there. Can't go wrong there. All right, so you've been in financial services and now sort of a technology space. What's one tool or piece of technology, so it could be hardware or software, other than your phone or your computer that you can't live without?
I would say Slack, but Claude is making a
Okay.
is making a run for its
Claude,
money.
I like it. All right, so you're a Claude guy. Sounds good. Slack would be high on my list as well. All right, sounds good. I like it. Do you have a favorite quote or phrase about money or success?
Yes, I'm trying to think of which ones, because there's several. I mean, I think that this is maybe too on the nose. Always remember Warren Buffett's quote on investing, like, be fearful when others are greedy and greedy when others are fearful. I think I probably first heard that again during undergraduate finance studies.
Sure.
Not really appreciating it. Now, having seen a few cycles, in hindsight, I'm like, that is very sage advice. Also, buy the S&P.
Yeah, there you go.
From the same guy. Like, those are my two pieces. So, I'm a big Warren Buffett guy. We had to read Ben Graham's books.
Yep.
Back when I was an undergrad. So
I read the same books.
Those
and
are some good ones. Yeah.
Learned those concepts around the same time in my
right.
life than you did. All right. What about, do you have a favorite book on finance or business?
Well, you said at first reaction, Big Short, and it's probably because I just watched the movie again.
Yeah, good.
That's a little more entertaining than some of the like academic books that I have. Like on my desk is right now The Changing World Order, Ray Dalio's book, which is
good one.
Drier. I'm having a harder time working through that, but if you're a finance or economics nerd, Ray Dalio's books are really interesting, very heavy on the data side. Big Short, for the average listener, I think is very educational and also tells a pretty interesting story.
A great story, very entertaining, educational in its own right. I like The Big Short a lot. I also like it. We watched the movie a couple weeks ago, Too Big to Fail. I read the book a while ago. Too Big to Fail is a good one that I really liked. Yeah, good one. Do you have a personal hack that you can share with the audience?
A personal hack? No, not really. I mean, I think that for me, the hack is routine.
Sure.
Whatever your routine is, it's nothing groundbreaking here, but if I'm out of whack, it's usually because one of my like staples, whether it's getting up and, taking a walk or going to the gym or whatever it is, like something's out of whack, something that I normally do. So, especially if you work remote like I do, implementing routine, no matter what it is my only hack.
There you go. I like it. What's one bucket list item that you've already accomplished?
In the business world, in my career, in the MuleSoft IPO, was an absolute bucket list. To be able to work on that transaction at that juncture of my career was very fortunate, something that I'll always look back on and feel lucky that I was able to do that. And then in my personal life, I've been really fortunate to travel to some awesome places. I feel like I've been to some parts of the world that are on bucket lists. And I still have more to go.
I love it. I love it. What's one milestone that you're working towards?
At Candor, really working towards building and growing the business. This is the earliest stage project that I've worked on. I joined my last company. It's probably 30, 40 employees when I joined that one. And there was more like 15. And so I'm really looking forward to the future at this company and helping to build into some of the similar size organizations that I've worked for in the past.
Very cool. And last one, if you could give one piece of advice to your younger self, what would it be?
Listen to Warren Buffett.
You can always go back to Buffett. You can always go back to Buffett. That's for sure. I love it. I love it. All right. And then if our listeners want to connect with you, collaborate, learn more about Candor, learn more about you, what's the best way to connect with you or your firm?
Yeah, I'm on LinkedIn.
Cool.
Easy to find, Adam Crawford or adam@candor.com.
Very cool. Very cool. Awesome, Adam. This was great. Thanks so much for sharing your time and your insights today. Super, super valuable. I enjoyed the discussion. That's it for this episode. You can find our podcast along with our newsletter and YouTube channel, all free, as always, at makingsenseofyourmoney.com. And as always, prioritize.
Yeah, thanks, Dan. Appreciate it.